Bitcoin is starting to look bullish again. The bear market resistance band is being reclaimed. Key levels are starting to flip back into support, and April ended up being a very strong month for Bitcoin. And honestly, if you look at the current price action, you will probably think the worst is over. But here's the scary part. We have seen this before. Because one of the biggest misconceptions that people have about bear markets is that they only go down. They don't. Some of the strongest short-term rallies happen during the bear markets, and that's what makes them dangerous. Hope is what makes bear markets dangerous. The market crashes, fear takes over, everybody becomes convinced that lower prices are coming, and then suddenly Bitcoin explodes higher, momentum returns, confidence comes back, people start calling for new highs again, and for a moment it feels like the bull market is back. But in bear markets, hope usually returns before certainty does. And on this channel we have talked about this bear market resistance band for a long time now. I said months ago that this level would become important again here in the 2026 bear market. Now what's interesting this time is that Bitcoin didn't reject from it. It actually pushed above it. And obviously that looks bullish. But when you zoom out, Bitcoin has done this in every single bear market. 2018 looked bullish too. Bitcoin pushed above the resistance band briefly, but there was never any real follow through afterward. No continuation, no sustained momentum, and eventually the market rolled back over. Same thing in 2022. Quick breakout, bullish sentiment returns, people start believing the bottom is already in, and then straight back down. But 2014 is the important comparison, because during that bear market, Bitcoin actually spent months above the resistance band, not days, months. The structure looked healthy, the market looked stable, and for a while it generally looked like the worst was over, until it wasn't. And that's the part I think people are underestimating right now. Because even if Bitcoin continues to move higher from here, even if we spend weeks or even months above this resistance band, that alone does not confirm that the bear market is over. Confirmation does. A key confirmation level would be the 50-week moving average on the weekly time frame, which is currently sitting at 95k. Historically, this level has been one of Bitcoin's clearest indicators for where the bearish momentum is actually ending. Now, it doesn't perfectly time the exact bottom. If you go back historically, Bitcoin usually reclaims the 50-week moving average a little while after the bottom is already in. But regardless, it has consistently acted as confirmation that the bear market was over. And that's why this level matters so much. Because if Bitcoin can reclaim the 50-week moving average and actually hold above it with a follow through, then there's a very strong chance the 60k low from February was the bottom for this bear market. Even if the timing compared to other bear markets isn't lining up perfectly. Now on this channel I usually focus on the bigger picture. Weekly charts, monthly charts, macro structures, because bigger time frames remove emotional noise from the market. But sometimes you need to zoom in, because lower time frames can reveal momentum shift before the bigger time frames confirms them. So for a moment, let's zoom in. This is Bitcoin on the daily time frame. And here you can clearly see the bullish structure that has been forming ever since the February low around 60k. Higher highs, higher lows, momentum improving. Compared to earlier this year, this chart definitely looks healthier. But just like the weekly time frame has major resistance levels, the daily time frame also has them. And one of the biggest levels on the daily chart right now is the 200-day moving average. Bitcoin recently came very close to testing it, but didn't quite reach it yet. And if we continue slightly higher from here, there's a very good chance we retest that level soon. Now historically during bear markets, this has acted as major resistance. 2022, rejection. 2018, rejection every single time. Now, does that mean that Bitcoin can't move above it temporarily? Of course not. Again, let's look at 2014. Now, in 2014, Bitcoin did spend some time above this level, but price still rolled over later on. And that's why this next move matters so much. Because if Bitcoin is truly going to sustain itself above these levels, it probably needs a catalyst. And honestly, I think that catalyst is the S&P 500. And that's because the S&P just keeps grinding higher and higher. Momentum stays strong and the market still doesn't look like it really wants to slow down. Now, if we look at extensions from the 200-week moving average on the S&P, especially around the 50% extension level, we are approaching levels where the market starts becoming historically very extended, very overheated, very expensive. Now, does that mean the S&P can continue moving higher? There is definitely still more room for upside. And if the S&P continues going higher, Bitcoin is likely gonna go higher with it. Because if you overlay Bitcoin with the S&P right now, you can clearly see how closely they have been moving together ever since the March lows. The correlation has been obvious. And in the short term, that sounds great. More upside, more momentum, more gains. But when you look at the bigger picture, this is where things start becoming uncomfortable. Now, if you take this chart and compare the current structure to the period leading up to the .com crash, the similarities start becoming difficult to ignore. Now, I'm not saying history is gonna repeat perfectly. Markets never move exactly the same. But if this structure continues to follow a similar path, then yes, Bitcoin and the S&P could absolutely move higher from here. But what comes after that is the dangerous part. Because if this really is starting to resemble the late stages of the .com structure, then this rally might not be the beginning of the next bull market. It might be the final stage before everything breaks. And that's why I personally would prefer to see a slowdown for some time. A real correction. Let the S&P cool off till late Q4 this year. Let Bitcoin reset with it. Build a healthier foundation. And then continue the longer term bull market afterwards. Because if the markets just continue moving higher from here without a major reset, the risk later on becomes much bigger. Now, Bitcoin and the S&P is obviously two different markets, because if equities experience a major unwind, nothing escapes the untouched. Liquidity affects everything. And that's why what happens to the S&P is also super important for what is going to happen for Bitcoin. So yeah, the next few months are going to be extremely important. Because this really could be the beginning of the next bull market or just another illusion inside the bear market. And honestly, I think the market is getting very close to revealing which one it is. But anyways, that's going to be it for this video. Let me know what you think down below. Do you think Bitcoin already bottomed in February? Or do you think this is just another rally before the bear market continues? And if you enjoyed this video, make sure to like and subscribe. I genuinely appreciate everyone who does that. It means a lot to me. We're building a community focused on the bigger picture and not all this short-term hype. And honestly, again, that means a lot to me. Because in bear markets, hope usually returns before certainty does. Thank you guys for watching. I'll see you in the next one. Peace.